I am super excited to welcome Kim Lewis to the show today. Hi, Kim. How are you?
I'm well. Thank you so much for having me. I'm excited to be here.
I'm super excited to have you here. I actually, in preparation for our conversation today, went back and watched the quick segment on Shark Tank when you were on the show in 2019, and I totally remember you two, you and your husband. So it was a good nostalgic throwback. I was like, how funny, full circle it comes. So, Kim, for those who don't know you, of course, you can deep dive into Kim's founder's story on the internet, but for our Cubicle to CEO show theme, I want to know what was your catalyst jumping from employee to entrepreneur or cubicle to CEO?
I was working at one of the largest grocery retailers in the country, and I was a district manager in training. And it was the most conservative place I'd ever worked. I was the only black girl out of 100 managers. Um,
Wow.
there were only two black people. And in that, and it's crazy because a lot of their grocery stores are in our neighborhoods. It's very funny. But that wasn't even the reason I left. It was more so because I got nitpicked for every single thing I did. I was coming into work early, an hour or two early. I was coming in, staying late, and like it wasn't enough. And my manager told me I was horrible at my job and I would never make it there. And I think looking back, he was just a little salty because I was fresh out of college and he was 50 and he had been working there for 15 years, and he was training me to be his boss, and I didn't put that together back then. I just remembered crying every day. And also I'm actually still struggling from carpal tunnel, working at that company because I used to rack like the freezers and things, and I was making like maybe 75K annually, company car. Like it was a good job, but it required all of you all the time, and it was weekends and all the holidays because it was grocery. If you ever worked in retail, you don't get the days off that everyone else gets days off. You are working. And your days off are like a Wednesday or like a Sunday. Well, not really even Sunday, like a Wednesday or a Tuesday, that kind of thing. And I just remember feeling like, oh my gosh, I hate it here. And I'm not going to be like these people who are here for 20 years. Now, I was listening to like Tim Ferriss 4 Hour Work Week on my way to a meeting that was like an hour or two away, and I just hated it. I started crying, and it was funny because my husband, he was not making very much money at all, like $15 an hour. But we've been together since we were like 16. I was like 21, and I was like, I want to quit. I'm like, I'm crying. He's like, I'm crying. I hate my job, and he was just like, okay, okay, come home. I don't want you feeling like this. And I literally just, I called my boss up. I was like, hey, like this is gonna be my last day. And she was like, just come to the office. Don't just quit like that. We can do it. Maybe take 2 weeks, think about it. We'll give you so many thousands of dollars because it was a high turnover job. And I was telling her about my manager and how horrible he was to me. And after 2 weeks, and I was like, I can't go back here. And luckily, I had signed my husband up for Who Wants to Be a Millionaire, and I wasn't even sure he was going to get on the show yet. But he had gotten on the show. We filmed it, and they basically were upset with me for leaving. I got to like a work meeting on time, but they wanted me there an hour early, but I couldn't because I went with him to see to the show taping. And they told me I should have sacrificed not going to the show taping so that I could be there for that meeting. I was like, whatever. So I quit, like a knee jerk reaction without 2 weeks notice. And that is something I regret. I do regret not leaving better. I'm not saying you have to stay in a job that you hate, but I do think your professional reputation matters. And I don't know. I wish I had transitioned more nicely, but I also was young. I was 21, didn't really know what I was doing. And I was also very emotional at the time. So that was my catalyst.
That is such an interesting story. I did not know that part. I am such a fan of that game. I just love anything like trivia related. I love Jeopardy. I love Who Wants to Be a Millionaire, Weakest Link. Like anything around trivia is just my favorite. So that's so funny that that your husband was on that show. I'm curious. Did he get far? Did he win? Did that help seed your next adventure?
It did. Okay, so I married like a super nerd. Which is the thing I realize now. I'm now attracted to like that in people. When I meet people who are like really, really smart, I'm like I love it because I'm like it's something I can learn from. But we used to watch the show back in high school. One summer we were watching it, and he got every question right for like 2 hours. I was like,
Wow.
that's not normal. Like most people don't get. He was the captain of academic decathlon in high school, perfect score in reading on the ACT. And I was just like, you need to be on this show. So I wanted some money for our startup. And I was still working at the time. I was like, you need to be on the show. I signed him up. I bought his plane ticket and I got him signed up for like an audition. He came home from work one day and I was like, "You're going? Don't ask. Like, I just want you to be on the show." And he's like, "This is stupid. This is like the lottery. There's no way I'm ever going to get on the show." And I was like, "Whatever." He goes. Long story short, he tests in the top 5 out of like 200 people, and he gets called back to be on the show 2 weeks later. And we found out when we were at a pitch competition for the app that I wanted to build. And we had lost the competition, but he had gotten a chance to be on the show. He ended up winning $100,000, and after taxes, like 80. And you don't know when you're going to get that money. So, like, even though you go on the show, it airs, you only get the money within 30 days after it airs. So if you don't know when your air date is going to be, it could be within a month or it could be within 9 months. So we got very lucky in that our air date was within 30 days after me quitting Aldi. Maybe it was 60 days. And so that was really helpful. So yeah, that was it. It was the catalyst to us like starting our journey in entrepreneurship.
Yeah, sounds like all the stars aligned, right? And that you made the right choice. I mean, like you said, maybe could have approached it a little bit differently, but hindsight is 2020. And I really like the dynamic between you and your husband, how you're a lot more spontaneous and it seems like you kind of push him outside of his comfort zone maybe, and how he is really steady and supportive and
Mhm.
really believes in you and your vision. And I think that's what makes you two incredible business partners of what you now do. So for the listeners, before we dive into this case study of how you were able to raise $1 million in 4 hours through crowdfunding and actually multi millions since then, right? Before we get into that case study, just for a little bit of context for those people who are not familiar with your product, can you tell us a little bit more about who CurlMix is for, who uses your products, what's special about it?
Yeah, we help women master their curls in 21 days. Our product is free via store credit, and we do that with a 4-step system that helps you achieve a wash and go. Our ideal customer is a Black woman over 50. She wants to wear her hair the same to her kid's soccer game as she does to her board meeting, as she does to grocery shopping or girls' night. And she wants it to be natural with clean products. And that is who we serve. We don't do anything outside of that. Yes, CurlMix can work with other ethnicities and other curl types, but the person who basically snatches the product out of my hand if I tell them what we do is a Black woman over 50. So yeah, that's what we do.
I think it's so key that you're super, super zoned in on exactly who your best customer is. This is something I tell, my community all the time. Yes, your product could potentially help many different types of people, but who is that one person that guaranteed you're going to get the best results for it? That's the person you want to, focus all your attention on. So that's great that you're so keyed in there. Let's rewind to 2019 because I feel like this is kind of, interesting that you raised money eventually from your customers, but you actually turned down an investment that most people would look at as an opportunity of a lifetime. So you were on Shark Tank in 2019 and Robert Herjavec, one of the sharks, offered you 400,000
Yes.
for 20% of your company. And you said no. And of course, we all know watching the show at home, we see like 2 minutes of that conversation, but I'm sure you were there for much longer. So tell us what ultimately made you decide you can't take that offer?
At the time, we were on our way to making a million that year. And I knew that if I went to a traditional venture capitalist, I could get a minimum a $6 million valuation at minimum. Robert's valuation put our business at a $2 million valuation. And what's funny is I went back to watch old episodes of Shark Tank, and they did the exact same thing, almost exact same thing to the Ring founder, who sold to
Mhm.
Amazon later, like literally that year. I think he was actually one of the guest sharks that year. And I'm like, oh my god, his episode was almost exactly like mine. Like he asked for 400,000 for 10% equity stake in the business, and they laughed him off the stage, and I was like, huh. And so I was like, I wanted to go in with the same offer because we were making a million that year. We were actually, I think, making more than he was. And so we had decided that we would not give up more than 15% of the company and had already brought the valuation down from 6 million to 4 million. Robert chopped that in half. And I was like, there's no way we can take that because we would have to raise money in the future. And we didn't want to own less than 50% of the business. And that's essentially where that was headed.
That's so smart. I think that you had the foresight to look at the long-term play, right? Because I think most people when they're offered money really of any sort, whether it's from a customer or whether it's from an investor, it's very hard to turn down money that is present on the table and to walk away from that. But knowing that it wouldn't serve your future selves, I think is just very, very wise. And nowadays you have raised, I think to date, what, over 5 million, right? Close to
Yeah, 5.7 to be exact, but yes.
Amazing. So the case study that we're talking about was the 1 million in 4 hours through crowdfunding. What made you decide to go the crowdfunding route? Were there any conversations between when you turned down Shark Tank and when you decided to do the crowdfunding campaign with more traditional investors, or was that really the next time you really brought up this idea of investment again?
I talked to traditional investors. So we had did 1 million that year, appeared on Shark Tank the next year because, you filmed in 2018, it airs 2019. And then that year we did 5 million in revenue. I went back out to talk to investors the following year. Well, before I did that, I got 1.2 million in funding from Jeff Weiner, the former CEO of LinkedIn, and his partners, shortly after Shark Tank aired. And then I was okay. That was enough money for a while. But after we got into 5 million, and we manufacture our own products. We have our full time staff in house. Like we have a lot of overhead that some e-commerce businesses don't have. And so I said, I'm going to need to raise more money. So I go out to raise in 20 top of 2020, in fact. Um, and basically, people were like, we know you've gotten from 1 million to 5 million, but we want to see more. Like, we want to see more. And I was just like, we 5X. What more is there to show? And so people were like, yeah, we'll follow, but we won't lead. You got to find a lead. And I was just like, I don't like these conversations that I'm having. I was like, is there a way for me to get to 6 million or 7, 8 million without having to do this again? So we got to about, I want to say 6 million that year, spending less on ads, but now people are looking at me the next year like, okay, well, you only went from 5 million to 6 million. They're like, you didn't really grow like you were supposed to. I was like, but I didn't raise money. And so I was like, it was just very frustrating. And consider that the people who I'm talking to don't look like me. So they don't understand that there's a market. They don't know that Shea Moisture was born at the height of the recession in 2008. They don't know that like there are tons of comps in my industry for $100 million acquisitions or $1 billion acquisitions, or even Olaplex had an IPO recently, a couple of years ago at a $15 billion market cap. They're not familiar with hair care. Even if it's like, you could even take the fact that I'm Black away. They're not familiar with women, right? Women only get 3% of venture capital, period. So I was just like, this is an uphill battle, but I know that my customers know that we have value. And so at the time, I was on Clubhouse a lot. This is back when everybody was on Clubhouse in 2020.
Yes. What a time.
What a time. And I remember hearing my friend Max from Caribou. She's the first Latina woman to raise 1 million in equity crowdfunding. And she was talking about equity crowdfunding. And before I had mentioned it, I heard of it and I was just like, but $1 million is not enough for all the work that you have to do for crowdfunding. Like, 1 million is just not enough. Some people are listening to me like, what does she mean 1 million is not enough? When you have a product business, 1 million can go very, very quickly. So most product founders are not wealthy or have a lot of money. Most of them are broke until they have some kind of liquidity event, whether it's an acquisition or an IPO. That's typically what's happening with a product founder, or they raise like 40 million bucks. They're not rolling in dough. They could have been making more money in corporate as a director of something than they are as the founder of that product company. So I hear about crowdfunding on Clubhouse, and the law was changing to raise the maximum amount for Reg CF or regulation crowdfunding to $5 million. And I was like, oh, this is interesting because this is what I wanted to raise from investors. And so Johnny from WeFunder gets in my inbox, tells me everything about crowdfunding. That, if you tell someone you want to crowdfund and they know you're making millions of dollars, they will hound you. They are not playing about their business. So, just be careful because you will get all the emails. But I love working with Johnny and Katie from WeFunder, and they helped me launch my campaign. And so I was like, I have 100,000 plus customers. I can raise my own investment. And so essentially we set up everything, the law changed. We dropped the link in our Facebook group, and my Facebook group of customers put in like the first few 100,000 to 500,000 for the investments. Like, it was bananas, like within a matter of like hours. And I was like, now granted, let me give you some caveats. There are a couple of things. One, it was in 2020, everyone was getting stimulus checks. So that like the market was inflated. So there was more money in the market. But two, I have a customer Facebook group of maybe 13,000 customers with 80% engagement. So that means that they are posting, commenting, liking, sharing something in the group within the last 30 days. And that's because we go live in the group. We post daily updates in the group about their business. Like, they talk to us and we talk back. I literally have someone on staff whose job is to manage that conversation in that group. So we had a very active community. We don't do a lot on Instagram because our customers are Black women over 50. She's on Facebook and Facebook groups, not on Instagram scrolling. You know what I mean? So
Mhm.
that was the first thing that we did. But now, keep that in mind. There was a ton of work leading up to that on the admin side, but also on the launch side. So essentially, just the way that you would launch a product is the way you want to launch a crowdfund. You want to have your PR lined up. Maybe you have 20 outlets who are covering it. I was like, what are my networks? Okay, I have a professional network of people I used to work with, people I know who work in corporate at high level executives. I have a investor network. Okay, which of them have large audiences that can share this? I have an entrepreneur friendship network, friends I know run other businesses. Who do I have in that audience? I have local Chicago people that I can reach out to. I have local Chicago news. I have these news stations. And then I started writing everyone's name. So that was like one, like figuring out who my network was. Then the other thing I had to do was do a breakdown. Okay, I'm raising $5 million. I could probably get 1,000 people to give me $1,000 bucks. I could probably get 2,000 to give me 500, and I could probably get like 3,000 to get me like 250. So it's all like, okay, so if that's how many people can get me this, which of my networks match up with each of those numbers,
Hmm.
and who's going to write those checks. And then it's almost like a domino effect. So you pick like what's going to be the thing that kicks off the domino of the crowdfund. And I knew that what went viral for us before would be the catalyst for kicking off our crowdfunding campaign. The thing that went viral for us before was an episode of our Shark Tank episode, but not just the episode by itself. You have to do it like the Shade Room does all of its like news, where they'll say like black couple raises, turns down 400,000 from Shark Tank, and then it was like invest at wefunder.com, da da da. And so it was that, but the video embedded with that title is what like had that effect. So essentially, I also picked maybe 100 Instagram accounts who could all post it at the same time on the same day. And then it would create like a massive sharing network and like a hype that, so there were like so many things. And this is totally aside from the fact that I am an email marketer at my core. So I essentially approach email marketing like Obama did during his election, where he was doing like plain text emails, telling stories and saying donate $1. I did that for all of my stories. And I did email, SMS, all of literally I probably wrote an email every week or every other week during that first month. And I ended up having to raise it twice because of like I raised the 5 million, but the only half of reservations. And I had to go back and raise the rest of it in cash, just because of we didn't know we needed an audit when we went live, so we had to go back and get an actual gap audit. So generally accepted accounting principles for the last 2 years, and we manufacture our own products, so it was very tricky. So I ended up having to do it all over again, which is a little frustrating. But it was a very methodical launch. It was not luck by any means.
Wow. Okay, my head is spinning. I was trying to take notes as fast as I could as you were talking. You already dropped so much gold, by the way, Kim. Like, seriously, everyone, like, pause if you need a moment to catch a breather and go back and listen to just those last 10 minutes. It's so powerful. It's really interesting getting an inside look at your brain and how you approach this problem. And I'm really, really happy that you shared the context around it so that, because it's so easy in today's world to look at a headline and go, oh my gosh, like Kim raised, $1 million in 4 hours. Wow, like what viral moment caused this? And in reality, like you mentioned, there were so many layers and so much strategy behind how you approach that allow that to be successful. So luck is not it. Luck is not a strategy, right?
No.
We all like luck, but it's not something you can depend on. So before I ask you a few more questions about your approach to everything, I want to take a moment to pause and explain what equity crowdfunding is, because I know I'm not alone. I'm sure there are a lot of people listening right now who are like, what does that really mean? Do they own a piece of your company? How do they get paid out and earn back their investment? Can you explain, like, I feel like Michael Scott right now. Explain it to me like I'm 5, right? Like if I go and give you $500 during a crowdfunding campaign, what does that mean for me as how I relate to your company now as a micro investor?
So equity crowdfunding is not a Kickstarter. It is not a GoFundMe. Those are donations or you are buying a product. Uh, Equity crowdfunding on WeFunder or Start Engine or Republic, those are exchanges of dollars for actual equity in your business. So shares. WeFunder only does preferred shares. But I think with Start Engine, you can do common or preferred. I can't remember.
Real
Um,
quick, what is a preferred share?
a preferred share is when, like, if you're buying something on the stock market and you buy a share of Tesla or a share of Snapchat or whatever, you're buying an actual share. preferred versus common. I could mess this up. But preferred typically means that if someone gives you cash as an investment in your company, when there's a liquidation event, say for example, a sale of the company, an acquisition, or a public offering, an IPO, that person is going to be paid out first. As well as if you go under, if your business goes out of business, you know what I mean? And you have to liquidate all your assets. Who gets paid first if you only get $1 million left? And it's like, well, it's your preferred investors, the ones who actually
Mm.
gave you cash in the business. Some people have like philosophies around them, like how that's unethical and my time was more valuable than your cash and all of that, which is why you have common shares. Common shares is usually what the founders have for putting in their sweat equity and all of that, but they don't get paid out first typically, unless you like rewrite your bylaws or something. So if you had given me $500 during my campaign, I think our share price at the time was a little over $3. You would have gotten like $3.29, I think. So you would have gotten however many shares make up that 500 minus any WeFunder fees or transactional fees or something like that. So you could have effectively owned over 100 shares of CurlMix at the time. And so we closed that campaign, so you can't invest anymore. But back then, you would have been an actual investor. Now, equity crowdfunding does not give you any rights to information. So it's not like you have to get regular updates unless you do what they call a Reg A plus. So if you want to raise more than $5 million, let's say for example, a lot of people call them like mini IPOs. Like you don't quite want to be on the Nasdaq, but you do want to do an equity crowdfund, and you want to raise 20, 30, 40, $50 million. And those people they have to file a report with their states every year, and they have to produce quarterly reports or annual, I can't remember, of audited financials. So that is like going public, which we didn't want to do that because we were like, we just, that's a lot of reporting. You could, if you go public, you could spend anywhere from $5 to $10 million a year on just maintaining financials and procedures and communications with the SEC and all of that, and audits. So and that's not saying that my company would have to pay that. Maybe if we did it now, it'd be like $1 million, but it's still too much money if you're in the growth phase. So we didn't do that.
Okay, Kim, I am going to fire 3 questions your way for a lightning round. Whatever pops in your mind, speak it, say it. You ready?
Hmm.
Okay, question number 1. What was your first concert?
um, Gosh, my first concert that I can remember paying for a ticket to go see that artist was Emily King. Do you know she has a song like "Is it something I need I don't already have? I know I get it from a good friend." It's funny. I'm not even a concert person, but my favorite concert was the New Millennium concert with like B2K and like Omarion and like Soldier Boy, like because that was me growing up in the New Millennium.
Yes.
So that was one of my favorites though.
Nostalgia is like the most powerful feeling in my opinion. Like I live for anything in that early 2000s time. I get you. All right, question number 2. What is one important skill you believe every person should have?
Oh, the ability to sell. It is the thing that most people in college, I remember in business school, no one wanted to be in sales. It was like the bad word, like like we look down on people in sales. And then when I got out of college, I was like, dang, those people make the most money. I was like, and people like want to be entrepreneurs, but they don't want to sell. They don't want to talk to anyone. They don't want to put their face out there. They don't want to be recorded doing any content. They don't want to go to expos and talk to strangers. And truly, getting good at selling teaches you so many skills. It teaches you how to, smile when you're getting rejected. It teaches you sales copy. You know how to write winning ad copy, or just like winning email copy, or just winning copy in general, which will also teach you how to motivate and inspire other people. If you ever hope to be a CEO, that's going to be your big job. It will also teach you how to like help people fix their problems. Like selling is like the beginning of so many other skills, and if you learn to sell, you will be a boss very soon. So
I really couldn't agree more. I mean, sales at the end of the day really comes down to persuasion and collaboration, right? And that's a skill that applies no matter what career track you're in or even if you're not working. I mean, it's a life skill to have. So
it
I
is.
I love that advice. All right, the final question. We're recording this at the time in real time. It's about to be Halloween, so I felt like this was a very on theme question. Your episode won't air until after, but I am curious, do you believe in ghosts? Why or why not?
Oh my gosh. That's a tough one. So I love Coco, the movie on Disney Channel. Not Disney Channel. Oh my gosh, I'm dating myself, right? Miguel and Coco. But I love the idea of the Day of the Dead and like being able to, putting your family members on the ofrenda and like being able to, honor them and remember them. And I think that's beautiful. And I know in the movie, that's when they come back to life almost and they come visit you and you leave out different things they might want on the ofrenda. Um, and so that movie makes you want to believe in ghosts.
I like that answer, and I like how the answer is very centered around because I mean, I haven't seen that movie yet. I know I need to, but it's so family, I think, oriented in the aspect of wanting to stay connected to your roots and your ancestors. So, good answer. You crushed it. Wow, okay, this is so fascinating. I love learning from you. You explained it so simply, which makes it easy for, me to digest and understand. So, okay, I'm processing this back to you. So basically, if I'm understanding correctly, with an equity crowdfund, your only real, I guess, opportunity to earn back the cash that you invested initially is like you mentioned, if there's a liquidation event such as the sale of a company, the acquisition of a company, or the dissolution of a company. Other than that, no matter
Or public
or
offering.
public offering, right. But in the meantime, if I've given you, let's say again, $500 as CurlMix is growing and, earning profits year over year, I'm not getting a cut of any profit shares or anything, right?
No, no, you are waiting for it's like an angel investment. You put the money in, you don't know how the business is gonna go, and you're waiting for some kind of event in the future. I like to tell people look at it like you would invest in your 401k.
Mhm.
Like you put the money in there and you do not you might be able to see a little graph of it, but you don't get to touch it for really I mean you can, but you really can't. Now, what there are opportunities, right? Some founders have bought their investors out, so like they're like, okay, we're profitable now, we're making a lot of money, we're gonna buy back our equity and give you a multiple. I want to give my crowds like a higher multiple. So I'm like waiting to do that. I want to just give them back the money they gave me. You know what I
Right.
mean? Like that's not right. And so essentially I'm trying to get the highest return for them as well. So that is my goal.
I really like this model actually because it's so symbiotic. Like your customers are what make you successful, right? They're the ones who buy your products. They're the ones who show up for you and who evangelize your brand. And then at the same time, you have their best interests at heart, not only from the perspective of delivering the best product possible, but also now as they've believed in your vision, you're like, let me invest in your future by giving you the best return. So I think that's such a beautiful approach that you have, and I think it really just shows your heart as an entrepreneur, so I admire you for that, Kim.
Oh, thank
Thank
you.
you for sharing that piece. Okay, let's get into, by the way, all these amazing strategies that you poured out around planning for this crowdfund campaign. So, the PR outlets, I think most of our listeners can kind of understand, what that entails in terms of, pitching media outlets to get on brand to hype up, like you said, the kickoff of the campaign. From your perspective, pitching them, was there any unique angle or, I guess, piece of information you included in your pitch that made them feel like it was newsworthy? Because, I mean, even though CurlMix at that point was already quite successful, I think, when you're looking at the news, people are raising money all the time. So not every time someone raises money is a newsworthy piece. So for them, what made it worth their while to, amplify what you were doing?
We had raised 1 million in 4 hours, and when we did that, that made it like. And typically, you need a big fish, so you need like one PR, one news article that's gonna make everybody else want to report on it. And one of the things that had been successful for me was blacknewspr.com. You could like pay for posting, and then once it's on there, a lot of people use it as a source of like black news, and then. So some PR we did pay for, and some of it we got organically. But the raising 1 million in 4 hours made it noteworthy. And then I want to say, let me think. Did we do? Because initially I didn't rely on traditional PR
Mhm,
because it wasn't as interesting. Like they don't really want to report on that.
mhm,
They want to report on like the excitement behind it. You know what I
mm,
mean?
mhm,
So I would say the PR is the second piece. The biggest piece is like coming up with a piece of creative that's going to create the domino effect,
mhm,
figuring out your network of who's going to share this, giving them that piece of content to share, on the same day at the same time. You sharing it first, and either having them share that link or reposting it on their own stuff. Um, and then we tried to like recreate it on Twitter, but it didn't work. Even though we went viral on Twitter before for the same piece of content, we just couldn't do it. But we were able to do it on Instagram, and we were able to do it on LinkedIn. Um, and then let me think.
Let me pause you for a moment there. So, okay, let's go to the creative piece then, since you felt like that was like what kicked off the domino effect, as you mentioned. So, the creative, this was like you said, the clip of and you kind of putting out that juicy headline of, black couple turns down $400,000 investment on Shark Tank. You were kind of putting like your spin or your narrative on this piece of content. And then are you saying you like literally took that video and you went and asked your network, would you be willing to share it on this date at this time to support our crowdfunding campaign?
Yeah.
Did you run into any what's the right word? I feel that most people who are like your genuine friends would want to show up and support you no matter what, right? Just because they love you and want to be there for you. But of course, with anything in business, there's always a little piece of, well, what's in it for me? Like, why should I use my voice, my platform to amplify what you're doing? Did you run into any challenges like that? And if so, how did you position it in a way that it really felt like a win win for them to get behind you in this way?
People want to be excited about what you're doing, and they want to be excited about something that they're helping you do. So if your post had like one share, no, I don't really want to share with your news. But if your post had like 1,000 likes, or 10,000 likes, or it started getting its own traction, then like they were more inclined. So I had to create my own like first tip of the domino, right? So what I ended up doing is I posted the link in our Facebook group. Actually, I let my customers know a couple days ahead of time that we were going to be giving them the opportunity in the Facebook group. And then I let them invest like a little early. So then I was able to go and say, hey, our customers invested 250,000 in like less than 24 hours or whatever in our crowdfund. I think this is going to be a hit. And then by the time we had actually launched, it was like a million. So it was like a million within 4 hours. It was like racking up very, very, very quickly. And then I can go back to those same PR articles or places and say, hey, now it's at a million in 4 hours. But I think you have to time it. You have to literally be like, okay, at 6 a.m., the post is going out. It's going to have some traction. Then I'm going to email it out at 8 a.m. to these people, and et cetera. So by the time they see it, it actually has some kind of social proof on it, because that's essentially what everyone is looking for, is social proof. So they can't all be at the exact same time. You have to methodically place who's going to do what when.
I feel like I'm having a light bulb moment. It's almost like the issue that you were coming up against when you were pitching traditional investors when they said to you, we won't lead this round, but we'll follow. Like if you get a big fish, we'll come on board, right? And you were like, well, I need you to be the early buy in. But you are basically saying that you segmented the rollout of the messaging around this and you used your most loyal people, your customers, to seed that initial raise and, like you said, social proof excitement so that you could then use that little snowball to get roll in the bigger snowball and then the bigger snowball and then the bigger, and it's just like a downhill momentum from there, right?
And that exactly, and that's the lesson I've learned time and time again. When we first launched our business, the DIY box for curly hair. So CurlMix started as like a DIY box, like a Blue Apron, but for hair. And I could not. I like when I first launched it, I sold one box to my cousin. She loves
Woo,
me,
go cousin, yeah.
right? And now she's our director of operations in our warehouse. So it's so funny,
Right.
Little did she know she was investing in both of our futures. But I was trying to get press to cover it. Nobody would cover it. And then I went back and learned how to actually pitch journalists. Like it's not just like I'm gonna throw up and put everything in your inbox that I want you to know about my brand and what I'm launching, because nobody cares. You have to. They care about getting eyeballs for them. Is this gonna get them clicks? Is this gonna get them shares? Is this gonna be newsworthy? Because that's what their boss cares about. So I ended up learning how to write copy for a good headline. Um, Basically putting it in the subject heading, and then I read like the hardest part about pitching journalists is rereading their previous work. You don't want to send them something and you've never read anything that they've written before. So I had to go back, and I would use this app called BuzzSumo, where I could type in like my category, like DIY hair care, and then see what the top articles in that in the last 12 months. And you want to do like the last 6 months, really, because people switch jobs a lot in journalism. And then I found, okay, Refinery 29, Jessica from Refinery 29. Let me read her work. read an article about DIY masking, DIY oils, DIY this. So then when I'm actually pitching her, I can say, "Hey, Jessica, I read your article on DIY oil, DIY mat, da da da, and I think you would love to write about our DIY subscription box." So the first one for curly hair, we already have Nikki May or Natural Chica on board. She's gonna be our first box, and Hey Friend Hey for our second one, which I paid for. And I think it's gonna attract this kind of attention. I think you would love to cover it. Everyone else had told me no, but Jessica from Refinery 29 told me yes. And then when she said yes, I went back to Essence, back to Ebony, back to, I was replacing, hey, Refinery 29 is covering our launch. We'd hate for you to miss out. And then we got like 7 people, PR articles to cover it when we launched, right? And we sold 100 boxes that first day. And I was like, oh my gosh, this is how you launch. Like, I feel like I had unlocked something. I was like, this is it. So now, so the same thing happened when I got that investment from Jeff Weiner, from the former CEO of LinkedIn. Shortly after Shark Tank, investors were like blowing up my phone. Like this had never happened before. And when they were all like, "Oh, we could do like 50K, 100K. We want to invest, give you a little seed money, this and that." Jeff called me up. Him and his partner was like, "We want to invest $1 million." I was like, "Really?" And then, we ended up doing like a valuation of like 11 million post money, over the 6 million that, we probably could have gotten prior to. And in doing that, now all of a sudden my round was oversubscribed. I had investors who I could not even take one in that round. And everybody was trying to give me checks, $10,000 checks, $20,000 checks, $100,000 checks. Like, people who were telling me that there wasn't a market for what I was doing, was now like, oh yeah, I'm so sorry, we missed out. And now I have investors to this day who are like, yeah, we messed up, we should have invested. And so now I know you have to have the snowball going down the hill,
Mm.
and you have to manufacture that first. Jeff only went to invest. He saw me on Shark Tank. Like, if I wasn't on Shark Tank showing that I had momentum, showing that I had traction, showing that I was figuring it out, he wouldn't have invested. Same thing for that first PR article we got from Refinery 29. Same thing for our equity crowdfunding campaign, repurposing something that had already went viral and then using it to snowball into our crowdfund. So I guess what I would say is I've learned to launch in these years. Yeah.
I feel like I just got a master class in launching. I mean, I'm like asking as if you guys can respond back right now. Do you feel that way too? If you do, please share on stories and tag Kim, tag CurlMix. I'm so in awe. This is the type of content, Kim, that I literally created this podcast for. I think there's so many instructional, like how to blah blah blah, right? Type of videos, content, interviews out there, but where I feel like the magic happens is when people get a little peek behind the curtain, they see it applied in a real life case study. Not like theoretically this is how you launch, but what did it actually look like? What kind of conversations happened? What kind of rejections happened? How did you pivot? I just want to pull out the piece around the Refinery 29. It's all about getting that one yes for our listeners, because notice, and I'm sure you guys caught this, but just for those of you who didn't quite catch this, I want you to put this down. The people that said no to Kim, right? She went back and said, wait a second, now I have somebody on board to do this article and I don't want you to miss out. Oh my gosh, the power of that FOMO saying, look, I know you said no, but I want to give you one more chance because now we have validity and credibility on our side with a big fish, right? So keep in mind when you're going out there pitching yourself, if you get 100 no's, you really just need that one yes. So keep believing in what it is that you're doing. And like Kim said, manufacture that momentum, whatever it looks like, whoever you think you had the best shot at getting that first yes from, whether it's your loyal customers, whether it's, your cousin who's like, I will buy your DIY box because I love you. Like, whatever that looks like, go to the person or go to the group of people who you think are going to invest first, and then use them to piggyback, right? It's like a constant piggyback effect. So that, I think that's truly brilliant. And even in my world, Kim, as I'm thinking about how we could apply what you're teaching here, I don't have an e-com business, right? I don't have a physical products business, but launching even in the online digital course world or coaching services world, I think, I don't know if anyone's ever actually approached it from the perspective of let me pre-launch it to, my existing customers and then actually announce like, oh, we've already had 100 people buy this product yesterday, and now we're opening it to you. Don't you also want to get on board? I think that's just such a brilliant strategy. So thank you for blowing my mind, and I'm sure a lot of other people's.
You're so welcome. I just lessons learned from failing.
Yes, yes, 100%. All right. I guess my last question around this case study is, were you expecting that you would be able to raise these millions from your own community from equity crowdfunding? And now that you've done it, would you do it again, or do you feel like your business has now progressed beyond a season of utilizing this strategy for growth?
Whew, okay, two-part question. And the first part was, did I think I was going to be able to do it? I knew I could raise 1,000,000. I did not know if I could raise 5. And I knew that that was gonna be, but I knew I needed at least 2. And I was like, "I'm really taking a chance here, so I have to give it my all because 5 is big and no one has done it," right? Um, in my space, looking like me, doing what I do, no one's done it. So, I wasn't sure about that. And then after we launched, I was like, "Oh my gosh." I think I cried because, like, it literally picked up steam in a way that I just did not expect. And I was like, community is like the center of everything. It
Mhm.
is the it community is the domino effect. So some people want to go and crowdfund, but it's like if you don't have a community, don't crowdfund because you have no crowd, you know? Like so it makes sense for people who have been underestimated and underserved, I think. So women, if you many of us build product businesses and then we bootstrap our way to forever and we're like, oh, I have 10 million, but I bootstrap. And now I need to go raise funding. And I think crowdfunding is perfect for those kinds of people because it's like you have a community who believes in you. And it's the hardest part is going to be the audit. So I definitely think it's for for those kinds of founders. And then the second question was, would I do it again? So do you mean like, do I regret the crowdfund that I did, or like would I do it in the future?
Would you do it in the future to continue to fuel growth for CurlMix, or do you think you've kind of graduated from the equity crowdfunding stage and you would go a more traditional route in the future for raising?
I think there's a place for equity crowdfunding in the future, but I think for us, what's tricky about it is the reporting. So essentially, to have a reporting of that structure where you're doing quarterly financials that you're putting on display is that it doesn't give you a chance to go back and edit anything that needs to be fixed. So once it's up, right? Like even your taxes can be amended. You can do an amendment for your taxes a year later and like, oh, actually, it was more accurate. This is more accurate. And the reason this is important is because we manufacture products, and if you don't have like enterprise resource planning system that can tell you the exact cost of every bottle the moment it leaves your facility or the moment that it's made based on the raw materials that you ordered yesterday, that sometimes that can change because it's not like arganol is always the same price. Arganol changes with the market, right? And so my cogs change and ebb and flow with the market. And so a startup won't have that software because it's expensive. It can be anywhere from $20,000 to $50,000 a year just for the software. Not even like the utilization of it, just access to the software. And so sometimes you have to go back and fix financials. I don't want to owe the SEC in that way, where they're like, you're lying to the public, you're misleading people, and and that's when you start to look at like jail sentences. so, you have to be a big enough business to be ready to handle that kind of financial reporting, which is why they tell you don't IPO until you get to 100 million in revenue. Because it costs 5 to 10 million to stay public.
This is so interesting. I feel like this conversation just really highlights not only the challenges that women and especially women of color go through to gain access to funding, but even after you gain the funding, it costs money to raise the like to even have the funding. You're still paying money, like you said, for the software to be able to keep the funding. So there are just so many financial hurdles that we face, and it's really inspiring to talk to someone who has experienced those challenges and worked through those obstacles and really come out the other side. So,
Thank you,
um,
Alan. I appreciate that.
of course, it's well deserved. Normally, I would jump to our last question that we ask all of our guests, but as a special little bonus question, if I may, just because you were on Shark Tank, and I know that some of our listeners may have a dream to stand on that stage someday. In the audition process, the casting call process for getting on that show, is there anything specific that looking back you feel like made the difference for you getting a final spot to actually be aired on the show?
At the end of the day, Shark Tank is a an Emmy award winning show, and shows that get Emmys are entertaining to watch. and they have good viewer content, and then they have like a consistent viewership, right? So at the end of the day, they are there to make good TV. It's not about your business. It's not about, oh, I'm worth this much. It's not about the strategic this, that. It is, are you good for television? That's how you'll get people who are like amazing entrepreneurs, like, oh my God, he's brilliant. And then you'll get people who are like, snake oil. You know what I mean? Selling snake oil. And so it's like they want both because you want to watch both. So I would say if you want to get on the show, you have to have a compelling story. Sometimes it's an emotional one. I think the one that comes to mind is the family who makes the cutting boards, whose father I think passed away in a
Oh,
fire.
yeah.
Exactly, you know exactly the story I'm talking about. And the story that my husband and I had was that we were high school sweethearts from the south side of Chicago, Kim and Tim. You know, it's a beautiful story, and we just happen to have a good business on the side. Other compelling stories, people who are survivors or people who are EMTs, or they did like they have some kind of job of service. And sometimes they do themed episodes where they want to have like everyone who is in a job of service. Maybe you're in the military, maybe you're a cop, maybe you're, you know what I mean, a nurse, and they like do like themes like that. So I would say it is important to know your story and to be able to tell it succinctly and compellingly in 30 seconds to make someone feel something, whether they feel love, they feel sadness, they feel, happiness, they feel, excitement. Like they have to feel something at the end of you telling them that 30-second pitch.
Such good advice. This is probably one of my favorite conversations on the podcast, Kim. And I'm not just saying that. I mean, really, if you went back and listened to all the interviews, I very rarely say that. So thank you for shining your light with us today and just sharing so transparently. I just love supporting women doing amazing work. And I hope that this reaches someone out there who needed to hear Kim's story today, or maybe you're someone who needs to buy Kim's products, right? You're a Black woman over 50, you should be running to the link right now. So we'll put all those links in the show notes. Make sure you follow Kim and CurlMix on Instagram and join their Facebook group if you're a customer. Kim, my final question for you today is, what does being a CEO mean to you?
Being a CEO to me means you go first. So a lot of times, I'll never ask my team to do something I wouldn't do. And I'll never, say something to them that I felt like I wouldn't want said to me. You know what I mean? Or I didn't feel like it was reasonable to hear. And I just feel like being a CEO means that honestly, it's the hardest job. I think people think that it's the spoils of the business. And it's actually like all of the hard problems that the smartest people that you've hired can't solve rise to you. And you have to remain graceful and kind and community oriented and thoughtful and ethical when those problems arise. And it is your job to deal with them while also fundraising and finding money for the business. And so, being a CEO means you go first, like you're the leader, you sacrifice most, that's what it means to me.
I love that answer. Thank you so much, Kim.
Thank you, Alan.